For more on just how bad it is, the company's future, here with us is Alex Gauna, who covers Research In Motion as an analyst at JMP Securities. Alex, very dramatic call today. Considering a sale?
I would call it refreshing, actually. Dramatic's one word, but I think that the new CEO now has set a very different tone for the company. It looks like their eyes are wide open, that drastic changes do need to be made for the company. So in a way, it's encouraging. There's nothing near term to get you believing that from a product perspective, they can turn things around. But at least from an organizational perspective, they're open to some alternatives now that were previously off the table.
And a big change, former co-CEO Jim Balsillie is off the board.
That's right. And so with him off the board and new ideas on the table, maybe it's time to take a little bit of a fresh look at where this company is going. I will note that this stock is trading at 1x tangible book. You've got 60 million shares short out there on this name right now. So with even a glimmer of hope, this stock could be interesting for the right class of investor.
Thorsten Heins did say the next few quarters will be challenging. So would you say the worst is not over yet?
To be determined. So some more pain is coming. We all know how much greater the momentum is from Apple right now, from the Android community. Certainly 2012 will continue to belong to those faster growing, stronger players, better ecosystem and equipped players. But again, if you're an investor with a longer term strategic mind to find value, Research In Motion is a little bit more interesting today than it was prior to this call.
So they said they're considering partnerships, they're considering joint ventures. What might those be?
Well, certainly a wholesale sale of the company is probably going to be difficult to achieve. But if we talk about some licensing mechanisms or partnership mechanisms in emerging markets, that can be interesting. If we can talk about the licensing of some of its assets, some of its push mail type of applications, there's a way that the company can still create shareholder value.
We're also seeing reports that they're considering major layoffs in the executive ranks. What do you know about that?
I don't know anything about that, but certainly the company, if it makes these moves before it starts hemorrhaging cash, that's going to be an encouraging sign for those value investors that might want to come in and take a chance on a turnaround.
This point was raised earlier. What about developing countries? Is there an opportunity for RIM there?
There is, but Apple knows about those opportunities. So does Microsoft. So those companies are also going after them with stronger balance sheets, a lot stronger product arsenal. So they need to move fast, but we'll see.
It's too late to catch up to Apple, too late to catch up to Android?
It's too early to say that they've got a strategy in place to go after these markets effectively, but it's not too late to say that there's some value left in this firm and that at least they're taking some bold steps to try to turn things around.
We will see what those steps might be. Alex Gauna of JMP Securities, thanks for joining us.
Thank you.